if the S&P and NASDAQ have bigger pullbacks, then absolutely great. I can get some pullback entries. If you do see, perhaps inflation ticks up more than expected or jobs data is worse than expected, those would be catalysts, in my opinion, that we could see some larger downside moves on the stock market, the S&P 500, the NASDAQ, right? These things which have seen a little bit of a pullback in the last 2 days or so. We'll see if that continues today or if we kind of reverse course. Here's the Dow Jones. Dow Jones is getting into an interesting level right now as we speak, actually. Got the 38.2% retracement coming back into play in the context of a very strong upward trend. I like the Dow, but the difficulty is how much does the Dow get loved on the Edge Finder? Not enough. So no trade for me, and I'm glad that that is the case because I have avoided trading the Dow, and that has been a winning decision. Simply because it's in neutral territory, I have preferred the ones that are stronger on the list, like NASDAQ, Nikkei, SPX. Those ones are getting higher readings for the index side of things. And that has probably saved me some money because, again, I wasn't chasing into the Dow too early. I'm going to wait for the Dow Jones to get a little stronger reading than a +3. A +3 to me is just a little too light. I want to see 5 or above to get a bullish rating on the Edge Finder scoring system, which for new traders on the Edge Finder front, sentiment, technical, and economic data are all being automatically imported by our system, and an algorithm determines whether each one of these variables are bullish or bearish for the underlying chart. Let's see what we had in terms of data points coming out. We'll see how this impacts the charts, and then I'll come right back to things. Let's do this. We're going to go switch to our all markets, see how things are reacting. Again, we got PCE numbers, employment cost index, unemployment claims, all of these really important data points. From the times that I've seen recently, the ECI or employment cost index has been all over the place with accuracy. So let's see how it came out. All right, we got better than expected unemployment claims. Love to see that. That's a positive right there. I like that. Employment cost index being lower than expected is sort of good for the inflation story. Let's take a look at core PCE numbers, which came in as expected. And let's see how this is impacting charts. We've got S&P not moving too much, US 30 not moving too much, Russell slightly higher, NAS slightly higher, gold slightly lower here off of, again, the good jobs data print. That would make sense. Dollar index just modestly higher, not too much there. And oil prices actually making a bit of an advance off of that. Not huge spikes, but still watching to see if there's any sort of delayed move. Unemployment claims were better than expected. 216K is pretty good. We will take that. 216K. 0.8 for employment cost index, lower than expected. 0.3 for PCE. Okay, so let's take that and let's go look at some ideas. Where does this leave me? Well, jobs data looks good enough. In my opinion, we are at good enough levels for jobs data. I don't, when it comes to this week, we've had some mixed responses. For example, let's go through what we've had this week. JOLTS, we've had ADP, we now have claims out and available, and then we have NFP tomorrow. So we don't know. This is our unknown, right? Let's break this down here. Our unknown is NFP tomorrow, which is a really big one. On NFP, unemployment rate / NFP comes out tomorrow. Claims today were good news. ADP was good news. JOLTS numbers, not super impressive. So we're 2 for 3 right now with good jobs data. That would lean me more towards positive on the dollar, positive on stocks. Now, I actually like this a lot for stocks because we have good jobs data, but we don't have impeccable jobs data. What's the problem with impeccable jobs data? Impeccable jobs data would mean an explosion on the 10-year treasury, 10-year yield. We want this, guys. This is, I've made this point many times. So let me make it once more because it is that important. It is so important that we get on the same page with this.
Gentlemen, how are we today? I think someone turned off the lights here, but It's whatever.
So you're here for a job interview, Mr. Nicula and Vlad?
I think we have a lot to bring to the table.
What is that, French? You guys from France?
Fort Lauderdale, actually.
Well, you flew in today.
Yes, the back window was open.
You guys traders? We could use some more help with managing the Discord.
In some ways, yeah. We want to be traders to your company.
We are very good at this sort of thing.
Did you just say traders or traitors?
Yes, traitors.
Do either of you have any background in this industry?
Oh yes, hundreds of years.
Look, I can already tell this is not going to work out. I'm sorry, but I love the capes though.
Trading can be scary. Need a safe space? Join the A1 Trading VIP Discord community. We have hundreds of committed traders inside sharing trade ideas, market news, and analysis, alongside our 4 professional traders. Join today with the link dropped in the chat or in the description down below.
Hi, I'm here for my 10 o'clock.
Maybe we're going to see some pause on this NAS rally. Maybe we're going to see some, pause on the gold rally as well, which relies heavily on yields going down, right? Maybe not so much, not a good example to use right now, Nick, because gold is up like crazy, even though yields are up. But I think that's also because people are a little uncertain about what's going to happen with the election, with the Middle East, with Russia. There's a lot of uncertainty in the world right now, and people in those environments typically flock to gold. There's also a ginormous national debt that has people worried, and maybe people are flocking to gold for that reason as well. Gold, to me, there's so many reasons to be bullish gold, and so few reasons, in my opinion, to short it. I don't really short gold ever. It's very, very rare. And if I do, it's with small size. I know you want to look at EU. I appreciate it, but I'm not going to if you spam in the chat. I've got a lot of things to get through here today. I appreciate everybody watching, but if you have a chart that you want to look at, and I'm not currently looking at it, if you spam it in the chat, call me a jerk, but I will actively avoid that chart now that you've said that. I'm a bad guy, okay? Look, S&P 500 pulling back here. I think that what could happen here is that if you get yields staying at current levels, stocks can continue to go higher. The problem is, if they start to break through, Chris Pulver made great points. He said, let's mark up our charts on some really important levels. This level and this level are things we need to watch. If yields continue to climb towards this, it's very likely you probably start to see a pullback in the market and the dollar gets real strong, starts to break out. If this happens and we start breaking through the previous high, now you're talking about probably a catalyst for a large scale pullback in the market, like a sell-off, like a hard sell-off, right? So this is danger range. That's the 5% or greater on the 10-year. Where we currently are is a warning level. I wouldn't say we're at crisis point because, again, we're still likely to see rate cuts overall at these levels, right? If the market sees these levels, rate cuts are completely off the table for a while. That's my opinion. I could be dead wrong about that. None of this is financial advice. I'm just an idiot on YouTube. You shouldn't listen to me. But that's my point, is just be aware of the 10-year. Don't forget it. It's a very important chart that a lot of traders don't even really fully understand. If you don't feel like you have a decent understanding of it, I have some videos on it. You should also just search it up on Google and just make sure you understand it because it's really important. Okay, so taking a look at gold, coming back to this for a second. I said I'm not looking to short gold, but it doesn't mean I don't think it's probably due for a little bit of a pullback. It's had such a strong rally here. Last few weeks have just been nothing but upside for gold. I'm not in gold. I really wish I was. I am in Bitcoin, which is going well. I'll talk about that for a second. I'll brag about that trade in just a moment. But a pullback here seems reasonable. Not something I would bet on, but something I'd be interested in if it starts to pull back and we get some confirmation from the Edge Finder. If we start seeing Edge Finder show up with gold readings again, right now gold's getting a -2, slight neutral to bearish reading. So I'm not really interested in it at this time. You'll see it has a neutral reading. Anytime something has a neutral reading on the Edge Finder, it means I'm probably not looking to initiate any new trades. Currently, we have Nikkei, USD CAD, NASDAQ, USD JPY, Aussie Yen, Euro Yen, Bitcoin, Pound CAD, Swiss Yen, Euro CAD, Euro Swiss, SPX, Pound New Zealand, Dollar ZAR, Euro New Zealand. Those are all of our current bullish readings on the Edge Finder after looking at the commitment of traders data, seasonality, trend, GDP stats, PMI numbers, which is purchasing managers, inflation, employment data, and interest rates. So that's kind of where we're at with all of this. You can see, by the way, that rise in the 10-year yield is already flagging at least some signs of red flags on things like stocks, where you're seeing, -1 for the NASDAQ, because again, what this does is it tracks yields. And if yields are rising aggressively, it's a red flag for indices and stocks in general.
Yeah, so at the moment, I'm kind of looking at Euro USD and to the trade on yesterday. Long on Euro USD so far is going pretty well. Actually, no, the day before yesterday. It's going pretty well. We're seeing some weakness on the USD. So we've had such a big move down for Euro, such a big move up for the dollar. So if you're looking at where that next pullback can be, I've identified some areas here on the daily chart, specifically on Euro, which I like this trend line with these confluences, the first, second, third. I'm looking for that fourth test as well coming into that low. We saw a nice reaction there on the 4 hour, which is where I found the entry. So now I'm just going to see what we can do. I've trailed stops to break even. This candle is about to close in the next 8 minutes, so I will be looking to trail it a little bit further, probably around here somewhere, to lock in some gains in the anticipation of NFP tomorrow. So I'll be looking at some gains there. I'm liking gold and silver as well, so that's kind of where my focus is elsewhere apart from Euro USD. It's basically looking to go against the dollar, and we have hit a nice level where the dollar is looking a little bit weak. I'm unsure whether that's going to continue or it's going to turn around, but at least looking at it from a technical standpoint, the market's been bullish for the past 4 weeks, hit a big level, so I do think it's time to see a bit of a retracement there. So that's kind of where my focus is right now.
Yeah, no, I like it. And I think the dollar weakness is a real interesting one to watch, especially the next, day and a half here, because we've got NFP tomorrow. But dollar sort of on that 4-hour chart, you can kind of see the momentum shifting here a little bit. We had an uptrend kind of consolidating and possibly breaking here into sort of more of a downward shift for the US dollar. It's been on an absolute, rip to the upside here recently. Take a look at the daily chart. The question here now for the dollar index is this going to kind of be able to break and close today underneath this level? I've been watching this level right around the 104 level. You can see we had a bounce there. We tested yesterday, gave back a little bit of resistance. But if you see a candle close today on the daily chart, this is at least what I'm looking at, underneath that low, it's probably a fair chance that we see the dollar kind of pull back larger, barring that we don't get some massive, jobs data point that just causes the dollar to, flip back super bullish. But price action wise, it's had a really strong run. It's been due for a pullback for a while. Question is how big of a pullback? Could be a large pullback, right? Could be a move down to 102.5 or 101.8. So I guess we'll have to see on that front. But I like that idea of potentially playing that weakness for a continuation in gold or silver. Which levels would you be looking at on gold and silver?
So yeah, I was originally looking at I think the same level you got marked up there, which is it's the daily chart, which is 2680, I think it was. No. Yeah, 2680. So I was originally looking at the retest of this high, but it never came back for the pullback, unfortunately, and it kind of left me in the dust a little bit. So now my focus is now looking at this area here, which is 2757 roughly for breaking retest. And that's basically my game plan for gold, because it's been such a strong trend. I'm be looking for the breaking retest of the recent high. Unfortunately, the past couple of highs, you haven't actually got that, but I'm hoping or at least expecting it to happen in this turn, because the markets are looking a little bit tired now, seeing a bit of momentum, not too far away from the high there as well. So I think it's pretty realistic to expect a pullback to that high. Of course, I need to see how we react there before I enter, but the plan is that gold is still very bullish. The chances are we're going to respect support. So if I do see an indication that the market is going to hold there, that's why I look to take my longs and see if I can take price higher. And for silver, it's pretty much the same setup as well. We've had a really confident break to the upside as well. I'm liking this area, our recent high of resistance. A lot of wicks there. Market broke through with really nice momentum, I think, a couple of weeks ago. Almost had the retest there last Friday. Didn't quite happen, but maybe silver gives us that move there, find some entries in that area, and let's take it back to the high and possibly beyond. We just had a really big break of some daily, weekly resistance here, so silver may start to fly a lot further. So I'm liking the upside potential on both of them. Just looking for a retest.
Yeah, I like the idea. I think gold and silver have just had such monster moves this year, and trying to find the top of them has been, we talked about that several times, but trying to find the top has been very difficult. I think that trying to find a pullback has been, rare, but a lot easier this year by far than trying to call the top. So yeah, I mean, if you get a little bit of a pullback here, I like that level you just marked up on the 4-hour chart. That's also a 50% retracement on gold from a technical basis. And if you get a 100% retracement of this recent move, you've still got support here. So I don't even mind the idea of like try one here, try two here. I mean, for me, that's often how I approach, the charts is I know and find entries to be very difficult. And I think most people do after, admitting it to themselves. They're like, wow, entries are very difficult to get perfect. So oftentimes what I'll do is I'll just mark out more than one area where I'll take a stab at a long. So like, maybe I take that idea, put a stop here. If that doesn't work out, I put a stop here, take a second attempt, and maybe I even take a third attempt here, where I've just mapped out these different levels and ideas, and I'm just still looking to get best possible risk to reward if I'm wrong and try and maximize. So definitely
I look at something similar as well, to be honest, because effectively the market's either going to go up or down. So you create a bias based on whatever confidence you're looking for, then you're looking for opportunity to trade that bias, and then you have something in place where, okay, maybe I was wrong with that bias, and you stop looking for buys. But as long as you're managing your risk and you're looking at positive risk rewards, any one of those positions could play out and it can make up for the potential losses you took early on as well.
Yeah, makes a lot of sense. What about yen pairs here recently? We've got dollar yen actually down a little bit here today, coming back a little bit, but then pound yen also, euro yen. These are hourly charts. Dollar Swiss. What are your thoughts on yen crosses?
Yeah, so yen have been interesting. I'm not really looking to trade them at the moment. They have been slowly grinding higher, and I think on the lower time frames there could be some nice buys as we keep pushing. But for the swing I'm looking for, I just want a little bit bigger of a retracement. So I'm not looking to do much at the moment. It looks like the market's still kind of steadily pushing higher. So maybe on an intraday level there might be some nice buys from that standpoint. But on the higher time frames, the yen pairs on the daily chart, I've already had a pretty big move. Pound yen, pretty big move up there. Looking at USD JPY as well, that's had a pretty big move up there on the daily. So I'm anticipating a bit of a correction for these at some point, and that's kind of the move I'm looking for to take advantage of on the buy back up again, possibly. So with the yen pairs, I think they're kind of at some heights where they might be looking to retrace. I'm not going to look to try and anticipate that because they could still push on. The yen pairs have been doing that for the past 2 years now, so I'm not going to try and get into that after we've broken through some structure. But if they do see some more downside next few days, I will be looking for some buys for dollar yen. I like the high over here around 149. That looks like a nice setup for me, but that might take a week or two to form.
Yeah, the yen pairs have been just a crazy bunch of charts here the last few years. They've been so volatile, so trendy, but also mostly to the upside. It's like it's almost looking like a NASDAQ chart almost. Like it's trending slowly up and then just having these crashes that are brief. So been an interesting one to watch. Speaking of indices, do you have any thoughts on S&P, NASDAQ? I know you don't particularly trade them, but you know how the audience is. They want you to they want you to clamor to them, whatever they want to see. And most of the time it is gold. So they love their gold. They love their NASDAQ, love yen pairs. So what are your thoughts on indices?
Yeah, so indices, I did see they had a bit of a dip there. I'm still pretty bullish on them because in terms of how I find my bias, it's mainly the daily chart in terms of finding a bias, and the daily chart is not showing me any signs of reversal. Maybe signs of slowing down and struggling to push higher, but that just tells me we might just have a deeper pullback at some point. This is NAS 100. We're still kind of grinding high in this channel. We've got the high here on the left, which I still do think we're probably going to see a new high at some point. Maybe the news might be the catalyst for that, but in terms of the technicals, we're still grinding higher, staying pretty consistent with these higher lows. So as long as we stay within the channel here, I do think there's a good chance for a push to the upside. If not, if we do break out, then we might just go through a deeper pullback, something similar to what we did with these two swing points here. That low, we might see another one at some later stage, but otherwise I still do think we're probably going to push higher. Same thing for US 30 as well. The question really for me is how big the pullback will be until we push up. So I was speaking earlier today on my channel about this area here. I like it for a buy, and also the level here as well should we break through that. And S&P as well, that's a similar market. That's giving a similar setup as well, which is how far, can't spell today, how far will we pull back before the market is likely to continue the trend. I like the daily high here as well. That is a really nice swing point, which is still a bit of a way down. So if the market does become pretty bearish, I think that's a nice place for a buy. But at the moment in time, we're still testing this area here, which I like too. So overall, the indices, I see more upside. My guess is just how far will they pull back before they continue, really.
Yeah, no, that's definitely fair. They've had such a strong, run for so long. It's now that there's a little bit of selling happening, I would not be surprised if you see a larger scale kind of pullback in the short run to maybe go retest some areas of key support, whether it be this 38.2, the 50% retracement, and lining it up with that level you drew too. That previous kind of all-time high resistance zone that was a big break and retest spot for us recently. So may go back and test that. We'll see, especially with some rocky next few days with the election. We will certainly have to see how that impacts the charts, what it does to things. And I'm definitely going to be watching the indices close. Other things we're watching, Bitcoin. I do still have a trade on Bitcoin. Miko, this has been
Nice.
it's been going decent. So what are your thoughts on Bitcoin? Are we there? Are we close? I mean, no, we're still just around the all-time highs. What are you looking for on Bitcoin?
Yeah, so I have to say I'm a big admirer of that breakout there. Really, really nice move. And in my book, I would be looking at this to continue a lot higher, because this is how I kind of drew the channel, connecting the lows there, using the bodies mostly. And I think that's where you kind of had your position. So really nice break to the upside. And the key thing I was talking about on stream last week with you is I wanted to see the break of 70k, and we saw that really nice with big candles, because sometimes you get breaks with like kind of small candles and it's kind of but this is a really nice candle there. I think the weekly looks like it's going to close bullish. We'll see what NFP has in store, but to me, I would be looking at pullbacks and upside. I think with Bitcoin, especially with this big channel here, the possibility of maybe another move like this is a real possibility. Of course, will it happen? We don't know, but I think positioning yourself long and looking to try and trail a stop and just being open to potentially a big move might be very rewarding if it does go for that big move. And if it does fail at the high here and it has some trouble, and maybe it decides to go for a big range again and starts to do something like that, and so be it. We analyze that, and there could be an opportunity later on. But the thing is, Bitcoin is breaking out. We already had a big move here. This could just be a pause in that, and now we see the continuation. So if we were to see some pullbacks, retest some highs, I think the reward is definitely worth the risk. And possibly if you can break the high there as well, who knows how far Bitcoin can push into.
Yep, I tend to agree. I mean, it's been in this range for so long, and finally you're starting to see some momentum pick up. The question will be, if we do get things like pullbacks into this area, can they hold them well? I've got my stop loss trailed. In fact, I think I'm going to tighten my stop loss just a little bit more, because really that psychological 70,000 level, the previous high, if we do pull back into that area, I'd be looking for a pretty quick snap off of that range And any extra risk there, in my opinion, is just risk I don't need to take. So I'm probably going to trim my stop loss just a little bit more here on that trade, and just see if I can, potentially see if we get, higher lows, higher highs, and just keep going. If that happens, I'll stay in the trade. If it doesn't, then I will, I'll take the profit that I've made here and just move on. So we'll kind of see, but I agree. I think that the risk to reward here, we don't, as you mentioned, we don't ever know for certain what's going to happen in the markets, but the risk to reward here looks pretty good in my view for a possible kind of continuation idea of what we saw in 2023. When things got real bullish, there was these massive runs on Bitcoin. We've gone into a long period of consolidation. It's possible that we have kind of we've gotten to the other side of that, and we might start to see this thing make a bigger move. If not, we go choppy, then I just take profits. I wait for another attempt, but we've waited for a long time here, and I finally think we're starting to see some momentum building for Bitcoin.
And then tomorrow is going to be busy. We've got NFP and unemployment, so of course that will give us some more light into the labor market. However, talking about right now, we have got euro dollar pulling into a very nice area of interest. So what we've got is previous structure, 200 daily moving average, and this might be an opportunity to get into some short positions to the downside. I'm still looking to short euro dollar. I'm currently in some DCA positions. I'll show you those now here. So you can see I've added in twice already. So I've got half of a lot size on here, 2.25 positions split up, and essentially I'm just going to keep adding onto these until I'm satisfied with the value of euro dollar. Obviously, we do have, as I said, we've got the news tomorrow, so that will also give some light into whether euro dollar still has some room to the downside. But as far as I'm concerned, it does. We are seeing a little pullback today off of today's news when we had PCE the initial jobless claims was actually really good. So again, a nice little bolster for the labor market. PCE is what is pushing down the dollar at the moment. I am in a dollar yen buy position. This was sent to my Discord this morning. This one was very simple. I explained my day trading strategy quite a lot, but essentially it's just a bounce off S3, which is support 3 based on previous day's moves. And we still have the daily trend bullish. So it's a very simple trade, really. Risk-free, obviously, into news. So it doesn't really matter what happens with this trade now. But yeah, there's not really too much else I'm looking at. It's mainly euro dollar. I've actually noticed that pound dollar is now creeped up. So the pound dollar wasn't reading on here. I think it was neutral a couple of days ago or even yesterday. So now to see pound dollar reading bearish is quite a nice sign. Although I think I might be done with the pound dollar shorts. So if we have a look here, pound dollar is still respecting our structure through here. Let me just pull up the research I've got. So here we've got the GBP, bullish pound, Goldman Sachs suggests short, euro pound trade. The UK macroeconomic backdrop is relatively positive with further potential upside on budgetary changes. Now, I'm not certain on that yet. Obviously, that's from Goldman Sachs. That's not my input yet. I still need to do my own research and back up that idea. So I'm just a little bit on the fence with going short euro dollar right now, especially with this 200 daily moving average here could act as a sort of dynamic support. So it's just a little bit concerning. So happy to sit on the sidelines for now. Facebook emojis. Someone's got Android. Gold. Yeah, we can have a look at gold. It's funny, you guys ask for gold every day and there is nothing to do. The same thing every day. Just got to wait. We are having a bit of a pullback here, obviously off the US dollar news, maybe some profit taking as well. So as I said yesterday, the first place I might look to buy gold is on this 50% level or within this fib level here. This obviously lines up with sort of, it's not super strong structure here, but it's enough to take maybe a 0.5% risk and give it a go. But yeah, it's tricky to buy gold at the moment. It's extremely high prices, obviously, relative, in 5 years it might be very cheap, but for now it's still very expensive. So yeah, just nothing to do here. What can you do? NASDAQ. Yeah, we can have a look at NAS. Yeah, so NASDAQ is on Edgefinder as well. We've got a score of 7. So the bias is bullish. Let's see what the technicals are saying. Euro AUD. I was actually stopped out of Euro AUD this morning. Yeah, we can go over that one in a minute though. So Naz, luckily I didn't take this trade, so we can remove that. Actually, this pullback might not be a bad idea to buy into. This trend line looks quite convincing. 200 moving average. We've also got the RSI oversold here on the H4. So I would enter this if we can see a 4-hour bullish engulfing candle. So if we can see this H4 candle close above this previous bearish candle, I might take a long position off this. Just continue riding this trend. You know, we've created a, or potentially here a higher low to continue this trend up. Obviously, like I said earlier, the edge finder is bullish, so far all the factors line up quite nicely. So I'll keep an eye on that. I'll add it to my watch list here. So yeah, Euro Australian. So yeah, we were short. You can see the position here. So at the time, it actually looked really good. So we had obviously the European Central Bank cutting their rates quite aggressively. We've got overall relatively weaker Eurozone data, but then Germany's data came out. Then we also had the Australian data come out, and I can't remember exactly what the Australian news was. Let me have a quick look. Where was it? I can't see it. Just give me a second here. Oh, it's CPI that came out for the Australian dollar. So that led investors to start thinking that the Central Bank of Australia is going to start cutting their rates, which obviously at the moment they're holding, or it's perceived they're holding, and that sentiment might have changed now. So this short position is no longer valid. It seems like actually it's more of a potential buy opportunity rather than a short. We're an aggressive push down after range, and that form price we push. Yeah, I'm not going to say your name, but yeah, I agree with what you're saying. So pound yen. I'm actually looking to get short on the dollar yen. So I've been saying for quite a while that I do expect a full correction. However, if you guys have been watching my segments for a while, you'll know I have a plug in a hedge fund, and he sent me a bit of a heads up that he's looking to short. So he's sending some research over in the next couple of days, which unfortunately I can't share with you. I can give you a rough overview. But yeah, so I've taken a long position to then eventually get into a longer term short. So I'll try and give you some juice when I can. Thoughts on the S&P? Let's see here. So the S&P is a reading of 5. So we do have a bullish score in the S&P. It's the weaker of all of the indices. So you can see we've got NASDAQ and Nikkei are much stronger. So the S&P is probably the weaker choice, really, but we can have a look at the technicals here.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.